on how you can fund your business through insurance today. Give y'all some good tips on some different things that you're probably familiar with and some things that you're probably not familiar with.
And I'm Daryl Perry, also known as the Notorious BTG, here to talk about employee benefits to help you scale and grow your business.
So now, honestly, the title is like, what? What are you talking about? How can I do that? Like, so I really am excited to help you, to hear you guys break it down for folks on how you can grow your business in some maybe a little bit non. I mean, you need these things, but we don't look at them in a perspective of, okay, I use them to grow my business. I need them because I need insurance. If I got employees, I need employee benefits, right? It's not like a strategic thing. It's like I have to have this. So I'm excited to have you guys go on. And so Daryl, go ahead and kick it off for us. Daryl, can you hear me? Oh, you know, Kevin, I'm gonna make you co-host, Kevin, and we're gonna have you go first, actually. So let's do
You
that.
sure?
Let's flip the
All right.
script. Yeah. So let's do that, Kevin, real quick. All right, so y'all, while Kevin gets ready, you should be co-host now, Kevin. While Kevin gets ready, I want to let y'all know that next Wednesday we have our monthly meeting where we talk about all the things that we have going on in the money team, with our committee members, what we're doing for the chamber, this monthly webinar being one of them, right? And so that is next Wednesday. It's from 8:30 to 9. Honestly, it's from like 8:30 to like 8:53. Because I'm like, nah, I need y'all to be wherever you need to be by 9 if that's your thing, right? And so please join us. I'm gonna put that in the chat. Actually, Kev, just let me know when you're good. Because
All
man,
right.
I know they're
All right.
excited to hear that they can hear me talking though.
It's gonna be 1 second.
Okay, cool. So next Wednesday, 8:30 in the morning, we're gonna have our next webinar on July 9th. Wednesday, July 9th, I believe, is the next Wednesday webinar. Don't like yep, July 9th is our next webinar at 11 a.m. And then we will have our next in-person event at in September, and that's our annual social for the money team. What we do is we meet in person, we talk about all the different aspects of financial services, the industry that we're all in. There's folks who are new to the chamber, new to the committee, new to Atlanta. I remember when I was new to Atlanta, that was a while ago. Don't get it twisted. I'm from up top. I'm not new to Atlanta. I just moved here though. I love it. I love it. It's no place like Atlanta. And y'all know this. I don't gotta tell y'all. Y'all know it's no place like Atlanta. So yeah, so we're excited, man. We're excited for what we have going on the money team and collaborations with other committees, other affinity groups. And so yeah, what else we got going on? What else we got going on? Let's see. Oh, if y'all not familiar with I Got Bank, Sharmina and the girls, whoo, Truist, the news. We're gonna be sending out an email highlighting all the amazing things that I Got Bank, the girls are doing, teaching financial literacy to the kids, and you gotta love it. You gotta love it, y'all. All right, and let's see, Kev, how you feeling? How you good?
Yep, 30 seconds. 30 seconds, I'll be ready.
All right,
I just gotta
cool.
share the screen.
Cool. All right. So as we are talking, if you have questions, feel free to put it in the chat. I guess I'll do my little spiel. I am Chike Uzoka, a speaker and financial planner. You can learn more about me at chikeuzoka.com, ChikeUzoka.com. I am passionate about teaching education and implementation. I help you, and then I hype you up, and then I actually help you. So that's the type of financial advisor I am. And yeah, I'm honored to be part of the money team, y'all. Like we have a lot of stuff that we're doing for our community, our committee, our chamber. And so we're excited for y'all to be a part of it. Let's see, Daryl, you good or
I'm ready, not you good.
okay, go ahead, Kev.
Yeah, go ahead, Kevin. I'm back.
Alright.
Power shut off here for a second. You can take it, I guess.
All right, let me share the screen first. Let me go to share. Can you see it? All right, here we go.
Yeah, it's on.
All right, here we go, y'all. All right, we're gonna talk about fueling business growth using insurance, and this is my section from Accutax Business and Financial Services. All right, first I'll tell you about Accutax, about us. We're a financial services company, and we're a dedicated member of Atlanta Black Chambers, and we believe in providing fostering strong relationships with our clients, and we provide everything from tax preparation, bookkeeping, and payroll to business insurance, and we're committed to helping you reach your financial goals. The problem that exists with insurance with a lot of businesses, market gap, approximately 75% of small businesses in the US are underinsured, or and 30% don't have insurance at all. So you can be underinsured, not having enough. That's 75%. Then you got 30% of people running businesses without insurance at all. And that's real risky when you run the business without insurance, because you're leaving yourself open to all type of liability. All right. Yeah, the consequences of being underinsured or uninsured include financial vulnerability, delayed risk management, and legal and reputational damages. And on the financial side, not having the right insurance could diminish your credibility with clients, investors, and lenders, and it can also stop you from getting certain contracts. Because sometimes when you apply to get contracts, they're gonna need insurance for you to get the contract, because you got to be insured and bonded to perform some of the work. All right. Another problem with cost savings, you got high premiums and limited budget, make it difficult for some businesses to get insurance. So you got to get with somebody who can customize the insurance for you to give you exactly what you need to make sure you have some type of coverage that you need. And another problem is business owners want something that's easy to understand and simple to use. And a lot of times people deal with agents that don't really break everything down to them. So they have they don't have the understanding they need to run the business. All right, we got the solution at Accutax. All right, our products make risk management easy and allow you to focus on running your business. Our target audience is small business owners, and we try to make sure that for cost savings, try to give you what you need, but make sure that you cover it all the way. Because sometimes you may be looking for an insurance policy based on your budget, but what you can fit in your budget might not give you the protection that you need if something unfortunate was to happen, to make sure you cover. All right, and we got a product that's easy to use and simple to understand. All right, just to overview what we're gonna do, we're gonna talk about protecting your business from liabilities. We're gonna talk about protecting your business income, protecting your business property, and protecting your personnel for your business. All right, protecting your business from liabilities. First, we talk about general liability insurance. This protects businesses from financial losses resulting from claims of bodily injury, property damage, personal and advertising injury, and medical payments. So this is really important for general liability. If you operate out of a location, then it's always good to have general liability insurance, because somebody can come into your location and anything can happen. They can slip and fall and get hurt, or you can if you destroy somebody else's property. And personal and advertising injury is something like that a lot of people don't understand. Like you can if you just say if you making advertisements about another business and you talking negatively about them, that's called a personal advertising injury. So you can be sued for that. So that's what general liability protects you from that as well. And then it also protects you. It also gives you coverage for medical payments if somebody sustains an injury on your premises. So that's the first part of liability. The second way to protect your business from liabilities is if you're a professional that provides any type of professional services. That can be from an insurance agent, a tax professional, a lawyer, anything along those lines. You get professional liability insurance. It's often also referred to as errors and omission insurance, or malpractice insurance. So this protects the business and individuals who provide professional advice or services, like I said earlier, and it covers claims of financial harm to a client due to actual or alleged mistakes, negligence, or failure to perform a service. Our professional liability insurance typically covers negligence, errors, and omissions, breach of contract related to your professional services, misrepresentations, legal defense costs, and copyright infringement as well. So that's another thing that that covers your business that can keep you running. And I can tell you one thing about errors and omissions insurance. You got to be real careful because most of the time if you get a claim, an E&O claim or professional liability claim, most of the time the insurance company gonna drop you. It'd be hard to get coverage against. So you got to have the insurance, but you got to kind of make sure that you're being careful when you're conducting your business. All right, the last part of the liability section is something that's very important now. That's cyber liability insurance, also known as cyber insurance or data breach insurance. Is specialized type of insurance designed to protect businesses from financial repercussions of cyber attacks, data breaches, and other digital risks. All right. Cyber liability insurance generally provides first-party and third-party coverage. So when we say first-party coverage, that's if something, a cyber event happens and it only affects you. So you would get coverage for data breach, response calls, business interruption, data loss and restoration, cyber extortion, digital asset damage, and fraud and funds transfer for fraud. Now the third-party coverage is for your customers. So if something happens and your customers' information gets jeopardized, then most likely they're gonna sue you. And these claims are a lot. Like a simple claim could be $150,000. So if you don't have that kind of money set aside to spend on something like this, cyber liability insurance is something important to have, because right now in the environment that we're in right now, the government even gets hacked, and people holding up for ransom, and they got more safety protocols than what we probably have in our businesses as of today. But if you get the cyber insurance, that can protect you from any type of cyber activity that would negatively impact your business. All right, so next we're gonna talk about protecting your business income. And this is one that a lot of people are not familiar with. Business interruption insurance, also known as business income insurance, is a type of insurance. It basically covers covers you financially to help you recover if your business is interrupted for anything like a natural disaster, a fire, or theft, or anything that can stop you from operating in your location or doing the daily activities that you normally do. So the insurance company will pay you a percentage of your income based on your financial statements. You got to show proof of what you normally make, and based off of that, they'll pay you a percentage of that income to keep you going until you can get back to your regular location and resume your regular business duties. And this is how it works. You have a triggering event. It's typically triggered by a fire, windstorm, or theft, something like that. And it could be anything. It could be a tornado or anything, just like a natural disaster. Then you got a restoration period. So the insurance gonna cover lost income and expenses during the time needed to repair or replace the property, the damaged property, and get your business back to normal operations. And this period typically starts after a waiting period, often 24 to 72 hours. So that's like 1 to 3 days, and can last up to 12 months. And extensions are available. Covered expenses are lost profits, ongoing operating expenses that you need to keep your business going. And then you're also going to get covered for extra expenses that you might incur to keep the business running, like temporary relocation costs or equipment rentals. Because if your business gets destroyed, you may have to work out of a virtual office, or you might have to go somewhere else to rent a space. So it also gives you coverage for that as well. All right, now we're going to talk about protecting your business property. If you operate out of location, commercial property insurance is something that you need, because the commercial property insurance is going to cover the building, whether you own it or leasing, and it's going to cover everything that belongs to you in it, especially if you have equipment, inventory, and any other business property that you might have. That can be your furniture, that can be outdoor property, and everything listed on this list. So it covers fire and smoke damage. So if the building catches fire, the commercial property will cover that. Storm and wind damage, theft and vandalism, burst pipes and water damage, explosions, vehicle and aircraft collisions, ride and civil commotion. And that's something to consider too. Like when people see ride or civil commotion, I mean, we live in that climate now because we have protests for stuff. So if you live on like in a location where a protest was to take place and it damaged your business, it also cover you for that as well. Anything with sprinklers, falling object, weight of ice, sleet or snow, building instructions, your personal property contents that's in the building, that could be your computers, your equipment, or anything. It covers everything within the in the dwelling and your outdoor property. You can also add business interruption that we just talked about as an endorsement. And you can also get endorsement for equipment breakdown. So it could be anything from your HVAC system. If you have boilers or anything, and you can also get that through that endorsement. All right. The next way to protect your business property is commercial auto insurance. And this is important for anybody that's using vehicles. Like if you're doing deliveries or anything, it's going to provide you the protection that you need. So it works. Commercial auto is similar to personal auto insurance, but you have higher limits because the risk is higher because you run the business. And then everybody know that if you in a vehicle and you get into an accident with somebody, the minute they find out you got a business, then they coming for you. So you got to make sure you cover. All right. So commercial auto insurance typically covers liability coverage. So that's going to cover bodily injury and property damage. And remember, anytime you say liability, that's to cover the other person. The liability is to take the burden off of you because liability pays somebody else. So if you get into an accident and somebody becomes physically injured or their car get damaged, then it's going to cover you for that. And then you have the physical damage, collision and comprehensive coverage. So we all know collision is from the wreck. Comprehensive could be something like a hailstorm or anything that's natural. It provides medical payments or personal injury protection for anybody who you injure. And you also have higher than non-owned auto coverage. And this is important because if you hire somebody, if for hired auto, if you provide coverage, it provides coverage for like leases, if any vehicles that you lease, rent, or borrow for business use, like if you in a U-Haul or something like that for delivery, then yes, you can get the coverage too to cover you for that. And it also covers non-owned auto. So if you got employees that's using their own cars to conduct your business, then you can also get them covered under that as well to make sure everybody's covered. All right. Now, last section, we're going to talk about protecting your business personnel. And you can do that through two main things. The first insurance is called key person insurance. And some people call it key man or key woman insurance. And this is a specialized type of insurance that's designed to protect you from the loss of somebody who's a key piece to your company. And it protects you from them in death or disability. So the way it works, you got your key person insurance. You got to identify your key person who you want to cover. And then the business takes out an insurance policy on them. The business is going to be the policyholder, the payer, and the beneficiary. You have two policy types. You can get life insurance for the key person, and you can get disability insurance. So when you get life insurance for the key person, when if they die, then you can use the benefit to train somebody else to take their place. With the disability insurance, you do that. If they become disabled, you can use that disability to do the same thing, to put somebody in their place to make sure that the business is running. All right, the next type that we can use, the next type of insurance that you can use is a buy-sell agreement. Buy-sell agreement is like a contract. It's a legally binding contract that the business owners put together to decide what they're gonna do if one of the business owners leave. And they can leave, it could be through death, it can be divorce, it could be retirement, it could be anything. But the buy-sell agreement will cover the terms of that departure. And then you do that with insurance as well. So they got three types of buy-sell agreements. You got the cross-purchase structure, where each owner agrees to get they get an insurance policy on each other. So with the cross-purchase, if I'm one of the owners, if my business partner has if we got a cross-purchase agreement, then that means when I die, the insurance policy that he has on me can be used to pay my family to buy out my interest in the business, and he'll own the business all by himself, like that. So that's how the cross-purchase works. And then you could get the entity purchase. That's when the business agrees to buy the interest of the departing owner. The business owner's life insurance policy on each and on each of the beneficiaries. So it's something like the cross-purchase, but it's just a little different. And then you got a hybrid agreement. And the structure for that is a combination of the cross purchase and an entity purchase, which offers and gives the business the first option to buy before anybody else can decide to buy. Because I know we got people like Chica that like to acquire through acquisition. So you can stop somebody from acquiring through acquisition with this agreement to give you the first right to buy the business before anybody else steps in. And this is just a few things that's that's out there for you all. And I know our time was limited, so I just want to touch base with y'all to let y'all see some of the things that's out there. But my information is here. My name is Kevin Marquez. My phone number is here, 404-465-1954. My email address is here, info@accutaxbfs.com. And my website is here, www.accutaxbfs.com. So if you have any questions or want to sit down for a consultation, you can go to my website and go to the services page, and you can book a free consultation, and then we can talk about what you need and how we can put something in place to get you covered to make sure that insurance is not the reason why your business has to stop. All right, that's the end.
You know me, Kevin. I'm gonna check you on that language. Insurance is the reason why your business can grow.
Yes. Yes.
Not the reason why you know what I'm saying? Like
Yeah.
that little shift, y'all. Woo, Kevin, that's what I'm talking about. That's a great information. So I don't see any questions just yet. And so I'm gonna let my man Daryl go ahead and take over. Well, that's on me, Daryl. Did I make you? No, I did not. Hold on, wait a minute. Hold on, wait a minute. Y'all thought we was finished. And y'all, we do this because I want to be able to get more people, more professionals in front of y'all. So instead of having one person do the whole thing, I said, well, we got 20 minutes. Y'all, come on, let's just share. Spread the wealth. I'm all about spreading the wealth.
Nothing wrong with that. And Kevin, that was a good bar there at the end. Don't let not having insurance be the reason your business stops. So I hope y'all paid attention to that. So real quick, we're gonna talk about some things in employee benefits. So I'll make it interactive. So the chat needs to engage with me. I'm not gonna have y'all just have you talking the whole time. So the first off, then we're talking about the current landscape, what's already out there. How much do employee benefits actually matter for your small business? Who can get them, different types of benefits, and how to use them to save on taxes. So a couple of interactive things. What percent of businesses do you guys think that are small businesses? If you get to think percent of businesses out there in the United States of America, what percent of the businesses out there in existence do you think are small businesses? Throw it in the chat, the number, whatever percent you think it is. So what percent of businesses do you think in the United States are small businesses? Okay, 85% for Janelle, 70% for Nicole. Actually, a couple votes there. 80%, okay. So as of recently, it's 99.9%. 99.9. So I know we're all used to going to Walmart, Costco. We're not going to Target right now. Places like that, we're used to those. But 99% of businesses are small, which meaning under 100. You can kind of change that, but under 100 is small. Oh, she can beat me to that. Under 100 is considered, there's micro and there's mini, but under 100 is considered small. So only 0.1% of this nation is large businesses. Now, with that being said, how many people do you guys think work for a small business? If you to think how many, 99.9% are small, what percent of people do you think work for small businesses? That's what we get. Chica said a lot. We get 90% work for small businesses. So what percent do you think work for a small business? We got 90%. I'll get a couple more votes, then we'll get to the next part. Who else is going to vote on that? What percent of all these people that are working for small businesses? 50. Okay, that's pretty close. 46%. 46% of people work for a small business. So even though the large businesses are minority, more people work for large businesses than small businesses, but it's kind of close, which is crazy to think that 99% are under 100, but 46% of people work for small businesses. Now, out of that number, let's say we got 99% of businesses are small. What percent of them do you think offer health insurance? So some of y'all are small businesses on this live. Some of y'all shop at small businesses, your family have them. So what do you think percent offers health insurance? So we got 10% offer health insurance, 10%. All right, 40%, that's closest. 40%, right on the dot. It was 40% offer health insurance, which again, this is under 100. So the 50 plus is probably driving that more so. If I narrow this down to under 50, it's a much worse number. But under 100, most of that's the 50 plus. Now, going further with that, what percent do you think offer just benefits? So health insurance is a benefit, but there's different types we're going to talk about. So if we just say benefits, we know that 40% offer health insurance. What percent do you think offer benefits? So we got 25%, we got 30%. I think it's supposed to say 17%. That's an interesting number there, Michael. 47%. So more offer just some kind of benefit. So 40% offer health, but 47% is offer something. Now that's important because I think as a small business owner, we often think of health insurance as the only benefit out there. And I've been 12 years doing this. So before I started doing this, I was the same way. I thought health insurance was the only way. But the power of benefits, a couple things I want to show you guys right here. This is something from Toggle, I believe, that talks about the reason what people want working a job. The second reason up there is a significant increase in income and benefits. So work-life balance is kind of always the top of the list of basically being, I want to feel important where I work. I want to feel good. I want to be treated well. But the second most important thing is their pay or benefits. Now, if anybody here knows a teacher, my wife was a teacher for 10 years, and this is always a complaint of like, hey, we don't get paid enough. So what they did for teachers is they started showing them, you know how much we pay for your health insurance? You know how much we pay for your disability? You know how much we pay for your retirement? So they started showing them all the other stuff. And they're like, oh, I didn't know it cost that much to get health insurance. So this just shows you how important this is employees. And also here on Job Seeker, this is showing you basically what employees value the most versus what employers value. So I don't know how many folks here are employers, and an employer can be just one person. You don't have to have a whole team. But this is showing you that for employees, they value it 61% of the time. The employers think it's 70%. So there's a small gap there. But then also you'll see flexibility also, 31%, 36%. So there's a gap from what employers think versus what employees think as far as how important it is to them. Now, another question. How much do you think it costs to hire somebody? This is where we get to the rubber meets the road. How much do you think dollar-wise, if somebody's making $50,000 to $80,000 a year, how much do you think it costs for a business to hire somebody? Now, there's different parts of hiring, but just average. Again, Nicole said $2,000. Let's get some more votes here. We got 2 to 3 times salary. That's a good estimate. I like that, Bobby. Let's get 1 or 2 more. What it costs to hire somebody. We got 1 more, then I'll show you the answers we got. Who else got to throw a number out there? Look, we can do it. The price is right. Even $1 can be a vote. But the average cost in 2019 was $4,100. 4,129. This was 2019. Also, even worse, in 2023, for $50,000 to $70,000, Bobby was pretty close. It's 1.25 to 1.4 times the salary. Now, people are like, what? Why does it cost that much to hire somebody? Well, here's why. There's some cost to hiring people. Whoop, went too fast. So the manager's time, whoever is hiring the person, like I have a team of 15 agents for my agency. I have to train people. I have to interview them. I have to go figure out if they know what they're talking about. So that's one part. Then it's also the, they're not effective. If anybody here ever had a job before, you have probation, where they said, hey, you're training for 3 months. Like if you go to a restaurant, you see this all the time. You go to a restaurant, your server is shadowing somebody. So that means you have 2 people doing the job of 1 person. Well, that's wasting money for the company. It's like, well, they don't know what they're doing yet, so they got to watch what has to be done. So it's costing the employer because they're having to do that. Also, highly skilled people, turnover. When you have a highly skilled job, sometimes you don't have the right people to do what you need. So what'll happen is you have something that needs to get done, but you don't have the right person, so it takes longer. So these costs are piling up, and a lot of businesses that are small will think, well, we never offer benefits before, why do it now? Well, this is the reason why, because it costs money to lose people. When you lose your employees, and I recently shared in the meeting yesterday that 92% of businesses don't scale. 92% of businesses in the United States do not scale, meaning they don't multiply. They don't have employees, or they don't have a way to maximize their growth. So when you think about that, this is a very timely matter because Black businesses are especially hit by this. We have a lot of Black businesses that are just solopreneurs. They do a thing by themselves. They have no team. And part of the wealth gap, I think, part of it is if we can scale more businesses, we'll have more wealth in our community. But the question is, who can get employee benefits? So people have asked me this, is it the right time for me to get benefits? What kind of businesses can get it? Do I qualify? Well, here's the answer. Any business can get employee benefits. Any business. It could be one person. It could be 100 people. And I love Chica said it's cheaper to keep them and make them happier. Yes. As I said, when you're married, it's cheaper to keep her. It's the same thing with the business, cheaper to keep them. But any business can get employee benefits. I have clients with one person. I have clients with 700 people. So it's whatever amount you need to fit with that. But here are some options that are out there. First off, we all know about healthcare. Now, healthcare, there's a lot of ways to do it. If you're under 50, I would usually recommend use Obamacare just because of cost. Unless you're paying them six figures, you might be better off getting a health plan, like a group plan. But if you're paying them, $12 an hour, $13 an hour, they usually get free Obamacare. And for those that are, if you're self-employed, that's something you can do for yourself. I have a daycare I work with in Cartersville. The owners, basically their income on paper was not massive, so they got Obamacare. So don't think that it's a bad thing. Obamacare is not really the reason healthcare went up. The reason healthcare went up because all of us back in the 80s and 90s, we went to the ER as a primary doctor. Anybody here ever do that? Anybody have family that went to the ER as a primary doctor in the 80s and 90s and didn't pay the bill? Anybody remember that growing up? I know I would see my family do that all the time. They would go get I'm sick, I got this, and they go to the ER, they don't pay the bill. And then what happens is it falls on the responsible people that have to pay more because they say, oh, you know what? 500 people didn't pay for Band-Aids, so now Band-Aids are $50 for one Band-Aid. So the Obamacare is just helpful to say no pre-existing conditions. That's the biggest help. Yeah, that's Michael. That's true. My family's in New Jersey. They used to do it all the time. So use Obamacare if you're under 50 people, use it. But the thing about it is, don't just say, hey, employee, go to this website. I can't tell you how many people have told me I didn't sign up for Obamacare because the website was complicated, or they did it and they did the wrong thing. Like I had a guy that lives here and he got a plan for Pennsylvania. I don't know how he did it, but somehow he signed up for a Pennsylvania policy living in Georgia. So I say get an agent to help them. Most agents like myself don't charge you a fee for doing an application. The insurance carrier pays them. So I don't believe in charging a fee for just doing an application, but get help. Now, group health plans can be two people. One of my clients in Florida, it's her and one employee. It's a two-person group. So there are plans that are group plans and a two people. Now this one worked because there is a therapy clinic. So she pays them like $60,000 to $80,000 each. So Obamacare wasn't ideal for them because no subsidy. So she got a group health plan, which starts at around $350 or so. And just to share with you guys, if you're a small business owner, there's not really a law you have to pay 50% of health insurance, but a lot of carriers ask for it. So there's no law that says that everybody has to pay half. I have one client that pays 25%, one pays 100. So it's really kind of up to you. When you work with people like Aetna, Blue Cross, Humana, they usually say 50%. But when you talk about these other plans that are out there, they'll say, hey, if you pay the bill, we don't care how you chop it up. So bear in mind that if you do a group plan, you can do that. Association plans are basically where you say, hey, my business is just 10 people. So if I go quote my plan, it'll probably be high. But you can actually get an association plan that says, oh, you're part of 60,000 people. It's not just 10, now 60,010 of you. So your rates are better because they lump you in other people. Do you ever say, does this work for 1099? It can. I would say for 1099, as long as they're steady. I don't like doing it for the 1099 you see like once a quarter, but they're steadily working for you like consistently. There are plans that will work with that. And PEO, the last thing is professional employment organization. You'll see this from Paychex and ADP, where it's like an association plan. They say, we'll get your workers' comp, your payroll, and your healthcare, which gets you massive buying power. If you have ADP or Paychex, it can be a good option. There's good and bad to that. One of my clients a year ago left me to go say, I'm going to go to ADP. It's like, all right, cool. We broke and have a fine peace offering. But then she emailed me last week and said, hey, I'm paying $1,200 per month per employee right now in healthcare. Can I come back to you? Because I was nowhere near that high. I'm like, yes, that's ridiculous. So it breaks my heart to hear business owners say they're paying a mortgage payment for their employees' healthcare. And I'm one of these agents that believes in universal healthcare. I think we all should just have it. So I'm gonna race to the bottom. So how much is your question? I'm looking for the cheapest way possible. But you have dental, you have vision, you have life insurance, retirement, voluntary benefits like Aflac, Colonial combined, legal protection like Legal Shield, pet insurance. Pet insurance is very valuable. It's like $25 a month, but you can insure your pet to say, hey, Petco's breaking me over the coals, get pet care. Virtual care, telemedicine, Wellbeat, these different programs out there, and also wellness programs, which are 125 plans. There's a lot of options there. Now, Birdman here is wondering how much we talking. You gotta do the Birdman hand rub. How much we talking? How much do you guys guess it costs for an employer to get employee benefits? Let's throw some numbers out there, and I got my other people over here, but how much do you think percent wise, what percent do you think it costs an employer to get employee benefits? Let's throw some numbers out there. What percent do you think it costs an employer, whether they're 1099 or W-2? All right, so Janelle says 10%. All right, what else we got out there? What other votes we got? What percent do you think it costs an employer to get healthcare, dental, vision, Aflac, Colonial, whatever you get? We got 30% from Chike. We'll do one more number. I told you I do prices right, but oh, Michael's hit it right there. 0%. Michael hit it. It can cost you 0%. Like things like voluntary benefits. What I've shared with several of you, like the Slutty Vegan with Pinky Cole. She was one of my clients in 2018 before she sold the business and all that. And she had 45 employees at the time. They weren't paying for Aflac. They got Aflac as an option, was not paying for it. Said, hey, I just want to offer it. Okay. Think of it like a vending machine. A lot of employee benefits are like a vending machine, meaning you say, hey, it's in the break room. If you want it, I'll take the money. Yeah, bogeys. Now, yep, I'm working with her on bogeys right now, too. So basically what happened is instead of you saying, I'm going to put money in the vending machine for you, some places do that. A lot of places say, well, hey, I'll just give you the vending machine. If you want it, you can pay for it. So a lot of benefits you can get at no cost to you as an employer, which is phenomenal because with costs going up right now, people got to think about, well, how do I keep my business sustainable when I have tariffs coming in and out, when I have situations changing, I got contracts being cut, how do I deal with it? Well, offer the benefit at no cost to you to say, hey, I'll offer it if you want to, because employees want it, because people want more than a paycheck. I always challenge business owners with this saying, like, every business gives a paycheck. Now, if you're not given a paycheck, then it's probably volunteer work or something, which is fine. But if you're running a capitalist business, you're paying them some kind of way. So if you're only giving them a paycheck, what makes you different? What makes you stand out? If you're only offering a paycheck, what's the difference? Now, benefit costs change when you employ your kids, or do they change? So, Bobby, they can change when you come employ your kids. Like I'm working with the hairstylist right now that she did her husband, her, and her 20-year-old daughter. Sometimes when you do like a family plan, if it's 2 or more kids, it's usually cheaper to do a family bundle. But when you have one and they're older, sometimes it's better to do separate. It just depends. So I'll look at the numbers to say, hey, like I had a couple yesterday. They were looking at, do we get dental and vision individually or as a couple? And I said, actually, individually is about 40 cents cheaper, which are like 40 cents, who cares? But hey, it's 40 cents. So we did it separately instead of doing combo. So basically, depending on the situation, healthcare is the biggest change when you cover family. But when it's like 2 or more kids, it makes sense to bundle it versus separate. But people want more than a paycheck. They don't want to just have only that's it. Let's see, Aflac is there a cost to the employer, the employee, and subscribes. Okay, so Aflac, there's no cost to the employer. The employee does pay out of their paycheck. We're talking $2 to $15 a week. Nothing crazy. I know when I first met Aflac, I thought it was more expensive, but it's about $2 to $15 a week. Now, there's no penalty for missing a payment. Just basically to catch it up. Or we tell the employee, the company, hey, this person was on leave. This person was on vacation, had no paycheck. Basically, the agent communicates that change, but there's no membership fee. There's no late fees. It's just taking out their check. Good question, though. So when there's low unemployment, we got to think about a couple things. People that you want to hire already work somewhere. When unemployment's low and you're trying to find someone, when it's like 4%, that means 96% of people are working. So that means the other 4% that aren't working, you might not want them. They might not be the kind of person you want. So you're hiring sometimes the bottom of the barrel. So the ones you do want to hire are working somewhere. So how are you going to make them come work for you if you don't offer them anything? Like, why would they leave their job to go work for you? If you're only offering the same pay and you can say, we're a fun environment, we're a family business. Everybody says that. I've seen so many job postings for my clients. I'm like, dude, nobody isn't even paying attention to that. They're not looking at it's a fun culture. But also, when you think about the post office, most people do not want to work for the federal government. I mean, I think it's clear right now, considering what's happening. But before that, working for the federal government was steady. You just knew, hey, if I work there, then benefits are real good. I don't like working at the DMV, but that health insurance is great. People work for the government because of benefits. So they have a retention rate as high as 95%, meaning they only lose 5% of their workforce. Who here would like to have a 95% retention rate? Would anybody here like to have 95% retention, meaning at the end of the year, you only lost 5% of your employees? Would anybody like that? I mean, if you were in a restaurant, if you were in a daycare, you're catering, you're doing marketing, wouldn't you love to have 95% of your team at the end of the year each year? That's what the government has. People don't leave. So the idea is that with these programs, you're able to save money because group rates are lowered most times. If you have people that are paid very well. So if you're paying them very well, yeah, short term is great. Yeah, I agree with you, Nicole. Make short term disability employee paid. I know a lot of places pay for it, but I do tell people, like, if I have a choice between you paying for disability or paying for medical, I'll say pay for medical, because disability is kind of like if you're going to get pregnant, if you're sick all the time, mental health. I have a client that worked for the CDC as a contract worker. And during when the guy at the White House was changing all the stuff with the CDC, she was stressed to the max. So her therapist said, hey, you need to take some time off. So her short-term disability paid her for mental health leave. That's something that I think only Colonial and Aflac do. I know Aflac does, I think Colonial does too. So she got paid for mental health for her disability. So yes, I think employee paid makes sense. It costs about an hour of work every 2 weeks. Nothing crazy. Now, a couple things too. When you offer benefits, whether you pay for them or not, it lowers your payroll taxes. Whenever you look at and guys, you should know this, your payroll tax, but that 7.65% FICA, you're paying that for every dollar they earn. So if you lower their taxable income, even if you're not paying for it, you save on payroll taxes. So this is a beautiful thing with not paid employee benefits, like if you offer dental, Aflac, I don't know, the cancer plan, accident, whatever, and you're not paying for it, you still will save money because the employee's payroll goes down. That also means workers' comp goes down because workers' comp is based off payroll. So if somebody basically has workers' comp, it's based on your payroll dollar. The lower the payroll dollar is, the less on workers' comp. Also increase your customer satisfaction. Your customers don't like seeing the revolving door. They want to see the same people there every single time they come in there. So you can keep those people. Reduce your hiring spend. The contributions you provide are a write-off. So when you offer employee benefits and you pay for it, that's a write-off for you. I know it's not free money, but it does reduce your taxable income at the end of the year. And I talked about workers' comp already. So I'm running out of time real quick. So the basic idea for me, who's that guy? Is that I've been doing this for 12 years. I'm a race to the bottom when it comes to benefits if it was cost effective, but any size employer can get benefits. And I think legit right now that with Black businesses, we have to lean into each other more now because of what's happening. We have to lean into each other more now than ever and realize that if we can scale our businesses, we can do better. We can close the wealth gap quickly. I love when Tyler Perry yesterday talked about he made more millionaires than anybody in the city combined because he's about helping his community. So this is where I think right now, with everything going on, try to scale up, try to improve. Cheeky, I'll pass it back to you.
Wow, man. Can y'all tell this what they do though? Like, can y'all tell like this educating and helping you understand these seemingly hard to get? What is this? How does this work? Do I need this and that? Do I just need this? Like the way they just break it down, you can tell that they do this. Yes, Dior, I agree. Excellent presentation, guys. Clap it up. Clap it up for these guys, y'all. All right, so what we could do right now is I'm gonna let people professionally unmute themselves and ask questions. I'm gonna let y'all professionally unmute yourself and ask questions to these dope guys that we got here. Provide. Listen, they charge for this, so use your time. Who we got? What questions y'all got? I'm hearing crickets. Does that mean everybody's questions were answered? Nicole, Marlena, Bobby,
I
huh?
I have a question. Sorry.
Oh, go ahead.
Just wanted to kind of ask, going back to the insurance presentation, one of the challenges is in insurance is always if the need for insurance rises, and then when you go to access the insurance carrier, there is all of a sudden it seems like there's additional stipulations that kind of come out of the woodwork and so forth. One, I want to know, how do you overcome that? And I guess this is more for Kevin. How do you overcome that challenge? And then also, as a business owner, what's the best way to kind of filter for that as you're deciding who is going to be your insurance person? I think you're still muted, Kevin.
Let me get off of mute. All right. The best way to, what I would say, what I do, I mean, before I became an insurance agent, I would get, a referral from somebody, talk to a couple of people that that's in business to see who they're dealing with in insurance, to get a good reference, because that's all you're gonna really have to really, base your decision off, because anybody else, you're gonna be meeting somebody, you're really gonna be just like taking a chance on, working with them. So I would say it's always good to get references, because when you get the reference, you're gonna have, you can trust the people that's referring you to that agent. That's what I would do. And what was the first, and could you repeat the first part of your question too?
I think you said like stipulation when I sub changes. Um, Yeah, Bobby, what I recommend for that, so like I think a lot of us will look at the rating of a company beforehand. Like for me, I'm looking for A-rated people. I'll take a B for certain stuff, but I also look at like claims experience. Like for what I do with benefits, I might see another carrier might be like 50 cents cheaper. But if I see the claims are always denied, I'm like, well, hey, you're gonna save money, but you're not gonna save money because the claim won't get paid. So I look at the ratings and the reviews before I kind of get in bed with somebody to make sure is it going to have a problem, because the last thing I wanted somebody calling me saying, hey, that stuff you told me didn't work. So I like to make sure before I even do it, is it a reputable company?
So is there an association or a specific website that does those ratings on a regular basis?
So for life insurance, there's something called Comdex. It's basically a rating that rates the level of an insurance company. They usually look for 80 and up. So think of it like it's 0 to 100. So if I see like a 40, I'm looking at Comdex and saying, nope, that's bad. You're also looking at their ratings of Moody's and different places like that. But also, I look at news sometimes, like Globe Life, for example. Chike probably knows this, but Globe Life is going through a bunch of like fraud and sexual harassment stuff right now. So I'm like, hey, if you got Globe Life, the writing's kind of on the wall for a SEC situation to gut them. So I kind of look around, and basically, if you're in the industry, your LinkedIn and stuff sends you stuff all the time. So like agents has been doing it for like 5 years, I would say, knows their stuff because they've been around it a lot. If you get like a brand new agent, they might not be tapped in, but around 5 years, I think you start getting like immersed in the industry. So you have an agent like Kevin said you trust. Is like, hey, can I just ask you questions? I just want to ask what's up. We try not to be thirsty as insurance agents because we know that we're relationship driven. So we don't try to like pound you with sales as soon as we see you. At least the people I deal with don't do that. If they're trying to sell you stuff like nonstop, that kind of is a red flag. But if they're kind of like, hey, just ask a question, get back to me later. That's a good agent.
Okay, thank you.
Uh-huh.
Yeah, thank you, thank you. So, oh,
I
is
have a
that something?
question. Hey,
Yes.
this is Marlena. So I have low wage earners, and I want to know how, as an employer, I can set up the ACA for my employees, because that's huge. That's a huge benefit for my low wage
Yeah.
folks.
So there used to be something called the shop, which I never really was a fan of the shop because it was kind of like you got a tax credit for 2 years and it would go away. So I never liked that. So what I recommend doing is basically having an agent help them with the ACA. So for example, I was at a daycare in Cartersville yesterday. The employees make $12 an hour. So when they
Uh-huh.
get hired as a new hire, that's a life event. A life event means I can sign you up year round. So life events, new job, I moved, I got married, I had a kid, something changed in your life materially. So I could sign them up within 60 days of that as a new hire. Now, if it's outside of that window, I got to wait until October. But
Right.
the owner's like, I would tell them to do it, but I wouldn't follow up on it. I don't have time to become an insurance agent. It's like, don't just have me do it. I basically just sit with their employees, go over their options, get them on Ambet or Oscar, Blue Cross, whatever they want. And the owner's not paying for it. But the employee is like, oh, I got free health insurance because somebody my boss knows helped me do this. Because better believe the owners, like Marlene, you probably have health insurance, but the employees are like, I don't know what to do. And your agent might
Right.
say, I don't do ACA, but it's healthcare. So that's what I recommend. There's also something called an ICHRA, which is an individual healthcare reimbursement arrangement, where basically the employer can pay towards the ACA plan. If they're higher
Uh-huh.
income earners, which this wouldn't apply to you, but for all y'all to hear, you can kind of pay money towards ACA plans if you want to. It's a convoluted setup, but what I typically recommend is have an agent help them go through the website because we have a quicker platform than you have. If you do it, it's going to take an hour. If I do it, it's going to take probably 10 minutes. So let the agent do it.
And then, Marlene,
Yeah.
I want to also add to what Daryl, the information that he's telling you, what everybody has to know, when you get when you apply for the ACA insurance, make sure that the agent has like some knowledge of taxes, some experience in taxes, because what people have to
Right.
know is that when you file your taxes, your tax return gonna be directly connected to the ACA application. So if you underreport your income to get free insurance and you make way more than that amount, then all that premium tax credit that they're giving you to pay for the insurance, you're gonna owe it back. So I see
You
this
have to
all the
pay it
time.
back.
I see this all the time with people saying that they're gonna make $15,000 just to get insurance for free, and then they come back at tax time and make 60. So now they owe the government $7,000, $8,000 back for the premium tax credit. So make
Yeah.
sure that you got somebody that can tie those two together, or get your tax person to
Yeah.
talk to the insurance
Yeah.
agent to make sure that you cover, because I've been seeing some ugly stuff like this tax season, like people on 11 and 7 and $12,000 because they just was going for free insurance and people not really explaining to them
Paying
what's
attention.
going on.
Right.
And then
Yeah.
another thing I've been seeing with that ACA insurance too is agents not doing their due diligence. Like you might have needed ACA insurance in 2024, but in 2025, you might have a job and you got insurance on your job. And I'm seeing people double insured because they're not
Right.
in contact with the agents, and the agents not doing annual reviews like you're supposed to do before you enroll people in insurance. 'Cause like Daryl said, I have annual meetings with my clients every year before I enroll them, because they might have had a life event. Their family size could have changed, anything could change, but you have to know
Yeah.
that. So you got to make sure you're dealing with somebody that's going to understand your situation to do the best for you and not the best for themselves. Because a lot of agents
Yeah.
just do stuff just to make money, and you'll be
Yeah.
you'll be stuck out. And like you might be a person that's looking forward to your tax return, and you might not even be getting them because your return gonna be used to pay the ACA back.
Yeah.
So
So
do you
if
guys have
if you
do
are
you have anybody you can
hold on.
recommend?
Yeah, hold on one second, y'all. Let's Marlena, you can connect with Kevin in the chat. I gotta get to these questions, y'all.
Okay.
So Janelle had a question. What is a specialty worker insurance or benefits? What is a specialty worker? I'm not sure what that means, Janelle.
Let's say if you have a worker that has a specialty, it's a difficult, like electrician or whatever, and you want to keep that employee as a benefit / insurance, what would the best or the, what would be an ideal plan for that type of employee?
So high level, I'll say when you mention like electricians, I do often recommend like accident insurance, which is like $5-6 a week and pays them if they get hurt on or off the job. That's one general. A good thing if you have like say highly compensated people, we've all heard the phrase golden handcuffs and stuff like that. If you can actually get life insurance basically for your key employees and fund it for them, and if it's a permanent policy, it helps them build future tax-free income. So you might say, I have 10 employees, 2 of them are valuable. I might not want to do a 401k. Well, hey, give them life insurance. You can fund it. And then basically the money that goes into that is pulled out tax-free when they retire. And you say, hey, if you stay here for 10 years, I'll keep on paying for this policy.
Hello?
That's
Okay.
what I'd say.
Yeah. Okay. So that sounds like that's Daryl, Kevin, I want you both to put your information in the chat because it sounds like the questions are going to lead to more personal one-on-one stuff. And I want to get to my main man, Kevin Ashford of Catered Cakes, his question about like tort reform. Listen, I was driving from Melbourne, Florida this weekend to Georgia, and what I realized was on 75, like Florida is just, I don't know, there's something, you're just driving through Florida, you just see land and trees and stuff. And then you drive into Georgia and you just see like billboard, 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 billboard. I'm just like, yo, why the scenery get so, you know what I mean? So the end of Kevin's question says, GA was considered one of the worst states for litigation, the billboards all over. So his question is, how is tort reform bill assisted with insurance costs and liabilities for business owners? I don't know if you want to elaborate on that, Kevin.
And see that's something that I'm gonna have to look that up, because I don't really be like the
I mean,
tort law.
we know Georgia, y'all sue a lot.
Yeah,
So up
I
top,
don't think it helped.
we don't sue like that. They just want to fight you.
I
Down
don't think
here,
it
people are
helped.
like, I want to fight you in court. And so it's like now I gotta see you in 2 weeks, 3 weeks, and now we gotta involve lawyers and stuff because people want to sue you. And
Well, see,
so
I
like
don't like it, Chica, because it only gives them 10 days to respond to auto lawsuits. So the problem in Georgia is with tort reform, it's so condensed of a time frame. They just settle. They just settle and stuff so fast. So all
meaning, wait, so when you say, so for up top folks who don't know what that means, when you say 10 days to respond, what do you mean? Like if I get in an accident or something, what happened? What do you
they
mean?
gotta have their case kind of buttoned up or something to present and within like 10 days. They have a very short time frame. So when Georgia
But
did
when you
that,
file the accident report,
yeah, like once the attorney gets involved and the insurance company, they have like a 10-day window to make something happen.
got it, to go to court.
Yeah, so the problem is all that's so short. They're like, we don't have time, so we'll just settle. So all these
That's interesting. They give you 10, like, is it 10 calendar days or 10 business days?
that I don't know, but I know that most people I know in that space are like, this made it worse. That's why they're just settling cases left and right.
Yes.
Listen, as a financial planner, I'm a fiduciary, and so I understand there's a big difference between calendar days and business days, y'all. So especially during holiday season or something. So
TJ,
I just, yeah,
let
my
me
man,
let
listen.
me chime in real quick
I was just about to introduce you. Hold on, let me do my due diligence, please, sir. Don't rob me of this. Listen, y'all. If you know Acknowledgement Magazine, y'all, if you know anything about Acknowledgement Magazine, y'all, the latest issue of Acknowledgement Magazine, y'all, got this gentleman on the cover. And I happen to call this gentleman MC, the sharpest dressed man in Georgia. And so the reason that I'm allowed to even be here right now is because of our Atlanta Black Chamber CEO and president, Melvin Coleman. Sir, take it away, because I had to do that. Thank you, sir. Go ahead.
Thank you, brother, for the acknowledgement. That's not necessarily a play on words. The issue has not dropped yet. I think it's about a week and a half, but it's going to drop. You know, we might have a cover party for that whole thing, but I digress. So first, I want to shout out to everybody who's in this session. All right, I'm looking at the different headshots and people that I know, and I'm like, yeah, that's what I'm talking about. Because when we do this type of session, this is about education. This is really about knowledge that, you know, we apply it and it's going to make a difference. So thank you all for taking out the time. This is important work. Shout out to Chike, Daryl, and Kevin. You know, this is about education. So tort came up, and I just wanted to chime in on it because tort reform and the legislation that was passed was very controversial. And it was a big deal to the governor and the Republicans. It was a big deal, something they've been working on for years. There are two sides of this thing, right? Two sides. One side, if you're a business owner, if you own a business, which that would be most of us, you know, you don't want to be sued because somebody slipped on a banana peel and it wasn't even on your property. I mean, it's Georgia was, or still is, one of the worst, if not the worst place where all types of lawsuits and things. So I think we get that, you know, the liability was just way too much. And some things had to change. And a lot of businesses would not come to Georgia because of that environment. They were like, no, we don't want any part of Georgia because the lawsuits are ridiculous. Okay, so we get that. Now, what has happened is you got this legislation. And so we as business owners, we expect the insurance providers to say, hey, we've got this legislation. Y'all should be able to come down on the rates, you know, the cost of insurance. So as a business owner, you don't want to have to pay the ridiculous premiums for insurance. Or at a minimum, you don't want them to keep going up. Now, what the folks in Florida are saying, because they have this legislation, I think it was a few years ago when it hit, but they're saying, hey, your rates, the insurance companies are not going to lower rates. and worse, they may continue to go higher. So as a business owner, you're like, well, what am I gaining from, this legislation, in the sense that I'm not going to see lower costs because the lawsuits are going to be impacted. You're not going to be able necessarily to just, say, hey, this happened, and next thing you know, you got a lawsuit on somebody's business, and it may be frivolous. I think that's the terminology they use, right? So yeah, that tort thing is real, and we'll know in a couple of years. We can look back and see the impact of it. But then the insurance premiums, they should be lower in conjunction with this legislation, and people are saying that's not going to happen. So a lot of people are upset about that. So I just wanted to share that since it came up. Thank you, Chike.
No, thank you. Thank you for clearing that up, because I had no idea what y'all talking about with tort reform. And so that's helpful to know. Keep your head up, keep your head on the swivel, and don't get in an accident in Georgia. Don't do nothing that's going to make somebody want to sue you, apparently.
Right, yeah.
I don't know what that list is, but if there's a list somebody could publish on what not to do in Atlanta to not get sued, Georgia, not Atlanta, Georgia, that would be super helpful. I think we should post that on the chamber
Don't
site.
go outside.
He said, "Don't go outside." Now we need people at our events, man. We need people networking. So listen, y'all, it's a little bit past 12. I just want to say thank you. Daryl, the notorious bow tie guy, Kevin Marquez, thank you for dropping those gems today for our folks. Y'all, next month, we'll be back here for our next webinar. However, next week, we'll be here for our virtual committee call when we're talking about what we got going on within our committee, what we're doing for the chamber, what else we have going on. We're super excited to have y'all joining us. Thank you so much. We appreciate y'all, and look out for those emails, y'all.
And
See
Juneteenth
you
is next Thursday.
soon.
Don't forget Juneteenth,
And
Chief.
Juneteenth. Yes, Juneteenth is next week, Thursday. We got stuff. Oh, June is Men's Health Month. Hold up. Pause. Let me get a 20. Let me get a 20. Yes, we got Men's Health Month stuff going on, sir. Can you please share that?
First of all, Juneteenth, ABC actually has an event in collaboration with one of our corporate partners, Chase, and it's going to be noon, so like 12 to 3. I believe it's like McDonough. They say McDonough Stockbridge. They're kind of fighting over where is this venue, a Black-owned venue, with great panel discussions, Jamaican-inspired cuisine, live DJ. So it's going to be a good time. But the dialogue and the discussion is going to be real around, okay, our community, Juneteenth, why is this stuff important? And I'm a big advocate. I appreciate this holiday, but I'm not so much into celebrating, and I'm more into reflection and acknowledgement and education at this time. We should take this holiday to educate not just our community, but the whole world about, who we are, who we come from, our experience, and why here in the present, this stuff is still important. So I wish it was more about that than, I don't know, I'm not going to hate on a parade and all that. Okay, that's cool. But I'd rather we focus and focus on what needs to happen. But yeah, ABC has an event on Juneteenth. If you haven't seen it, we'll share it again very soon.
And then we got a bunch of Men's Health Month stuff coming up, going on this month, y'all. Wrapping up like early July. But yeah, we got stuff going on. Please keep an eye out on the emails. And listen, we are the money team from Atlanta Black Chambers. Our goal is to help you build this thing right here, your financial house. That's what we do. All right. So from the foundation to legacy, our goal is helping you build it, grow it, enjoy it. That's what distribution is. You enjoy the money, and then leave it for future generations, y'all. Because we're great at one generation starting and building, and then we're great at another generation just in Nigeria, we call it chop the money, right? Just blow it on the apartment in Buckhead and that Ferrari, right? And then we got to restart it again. So we're here to help you build it, grow it, enjoy it, and keep it going, y'all. So we will see y'all soon. Thank you for joining us this morning. Y'all have a wonderful, wonderful rest of y'all week. Thank you.
Great session, fellas.
Oh, show the house. Yeah, y'all. Screenshot this house, y'all. Right here. This is your financial house. This is what we help you do. Right here. Everything.
You can't share
Right
that.
here.
Okay.
Screenshot that. We are in the accumulation phase right now of the house. So that's why we're talking about growing your business, growing your assets, right? Compound interest. How do we grow our money? And then we're going to talk about distribution, right? Enjoying the money, right? Keeping the money going, right? And then legacy, we wrap up the year with our family wealth summit in November, where we have adult stuff and we got youth, because we can't talk about legacy if we're not talking to the kids. If you know me, I'm passionate about working with the kids, and so that's what the legacy piece is all about, is making sure we are having those family financial conversations in the house. We got to let go of the whole, they're kids, they don't need to understand what's money's going on in the house. The kids know what's going on in the house with the money. They feel it. They feel the energy, the tension. They feel the comfort, the ease. They feel whatever it is going on in the house. They feel it. So let's talk to the kids about it, y'all. So we appreciate y'all. Enjoy the rest of your day and your week. We will see y'all next week and next month, y'all. Take care. Thank you.
All right. Great session, everybody. Thank you.